business news now. Growing concern has been raised over the rising number of business liquidations. According to the latest StatsSA figures, 145 businesses were liquidated in September. This brings the year-to-date total to 1,180 closures. That represents a 23.9% spike compared to last year due to unpaid debts, fragile cash flows and rising operational costs. Key sectors under strain include finance, insurance, real estate, trade and construction. CEO at Coface Africa, Abdul Vali, discusses this with us. Thank you so much for your time, Abdul. First, let's look at the areas of most concern.
Yes, well, if you look at trend in insolvencies for the year, well, although the October data is slightly upward on a year-on-year basis, if you look at the cumulative on 10 months, basically we can say that insolvencies have been rather stable, and this is actually already a big difference in South Africa from other parts of the world, because we have been seeing that insolvencies have been trending upwards everywhere. It's a normalization after the post-pandemic period, but also the combination of the current economic environment of low demand, high interest rate costs, high wage pressure, because there was a lot of inflation, obviously, especially in 2022 and 2023. And so in South Africa, it's actually quite surprising to see that liquidations are still relatively low. However, that does not necessarily mean that South Africa is doing better than the other countries, or that the economic conditions are different, because as you've just said, South Africa is still in a low growth regime. Interest rates are still high, although we're in an easing cycle. Price pressures also on the wage part especially are still high. So that is why the fact that liquidations are not spiking like in other parts of the world might also indicate that there are some specificities in the South African economy regarding just the firm environment, which makes the official number of liquidations low, but which might mean that there is a hidden part to the picture, because the environment does not suggest that South African companies are faring better than in other parts of the world.
Right. Having said that, though, Abdul, is it a fair question to ask whether this can be sustainable in terms of the low levels of liquidations that we are seeing, as opposed to the picture worsening given the global and local economic dynamics?
It all really depends on how you consider liquidation. In South Africa, actually, relative to other parts of the world, liquidation data can be a bit harder to interpret. First of all, by construction, liquidation data, as in South Africa, does not really include the informal part of the economy. South Africa's informal economy is actually slightly smaller than in other emerging economies, but it is still quite a substantial part of its GDP. And secondly, one has to consider that, and I think that companies are aware, that the regulatory environment in South Africa is quite restrictive. And it's restrictive for firm creation, but also for firm exit. So this might mean that because of this regulatory burden, you can have a number of liquidation that is stable or even decreasing as it has been for the past years, but that actually, because of the costs of liquidations, you have companies that actually go out of activity but do not liquidate. And so then that kind of non-activity would not be reflected in liquidation data, but it would not necessarily mean at the same time that companies are actually not in a stressed situation, especially in terms of cash flow or just not being solvent. And thirdly, we also have to consider that when you look at liquidation, obviously when you have a spike in liquidation, it's a sign that there is most probably a deterioration in the economic environment, right? But liquidations are also a natural part of the economy, in the sense that you have to have companies that exit the economy for more performant ones to enter. And so in South Africa, the lower liquidation numbers could also mean that just it's a result of the low growth. There is not enough companies being created. And so since you have less companies being created, you also have less companies being liquidated. And so that is one signal that is quite important to keep in mind. So in a sense, we might see the number of liquidations increase even if you have higher growth, just because you have more companies that are entering the market. At the same time, you could also have liquidations that remain low, but growth that also remains low, and in which case it's not really a sign that the economy is faring well.
Lastly, Abdul, to what extent can there be an element or a lever that is used particularly by the state to ensure that businesses, especially small businesses, are cushioned solely because they also feed into how much of the South African unemployed is absorbed into the job market?
I mean, I think that in terms of public policies, I feel like the current reform agenda is starting to address some of the more structural issues of the South African economy, and one part of it being the regulatory constraints. Because, as you said, the regulatory environment is such that there is very little room for SMEs or VACs in particular to be created, and those are basically the lifeblood of the economy. So in terms of public policies, really easing the regulatory burden, for instance, also easing some of the procedures for public procurement so that smaller companies can participate, reforms that go into the way of stimulating the smaller size entities, but also making it easier for them to liquidate in order to, for instance, reinvest their assets or go into new entrepreneurship, would go a long way into actually making an economic environment that is more conducive to firm growth in the number of companies.
Absolutely. Thank you so much for your insights. Abdul Vali is the CEO at Coface South Africa, talking to us about a concern that's been raised around the rising number of business liquidations in South Africa.